This is Chris Carlson, and welcome to the Boulder Banking Podcast. My guest is Kyle Thomas of the Appian Corporation. In this episode, we focus on how technology is affecting all segments of the banking industry. Kyle has a unique perspective, having been a bank examiner, a vice president with the Conference of State Bank Supervisors, and now a leader at a technology company. Hey, Kyle, thanks for joining us today.
Great to be here, Chris. Thank you.
Hey, to kick off our episode today, Kyle, can you give us a brief background of Kyle Thomas?
Sure, I'd be happy to. Well, I began my career as a bank examiner in the state of Iowa after graduating from the University of Northern Iowa in Cedar Falls. So I did that for a few years, driving around eastern Iowa, examining banks, big and small, and then moved to Washington, D.C. to join a group called CSBS, Conference of State Bank Supervisors. I moved there in 2010. And I started my job at CSBS working in bank supervision policy. So I supported anything affecting bank examiners, especially any kind of coordination efforts between state bank regulators and the federal regulators who they work with very closely. So I worked in system development, working on software applications that were being developed out of the federal offices for benefit of the regulatory community, policy implementation, and with that goes examiner education. So any kind of changes to bank regulatory policy, things like FASB changes, accounting changes, those kinds of things, all kind of came through my office and worked to help implement those changes out to the state regulatory workforce. And then my last hurrah at CSBS was overseeing the development of a application to help non-bank state examiners. CSBS wanted to develop a nationwide platform to help state non-bank examiners, so those examiners that regulate the mortgage industry and the money transmission industry and the payday lending industry and all those other financial services industries. There was no software application out there helping them do their regulatory work. So CSBS wanted to create one, and they had me lead that development effort, and we did that for about 4 or 5 years and went live just before the pandemic with that new system. And then I had such a good experience building out that platform on a solution called Appian that in 2022, I actually made the move over to Appian, working in their public sector team. And that's where I am now. So I'm helping lead the public sector sales team efforts, working with government agencies here in the States, at the state level, at federal level, and then overseas as well.
Awesome. We'll talk more about that. So Kyle, your connection with the Graduate School of Banking in Colorado was through the Community Bankers Summit. Tell us a little bit about the summit.
Yeah, I'd be happy to. I'm actually a graduate too of the Graduate School of Banking. I think I graduated in 2015. So my connection kind of started then. And then I was pleased to see this Community Bankers Summit and the associated leadership track. So it's a 3-day event, obviously put on by the Graduate School of Banking. Day one is a summit for community bankers to get together and talk about current trends, issues affecting the community banking sector in particular, and really, serve as a venue for networking. I'll be speaking on day one on the topic of artificial intelligence, which I think we'll be talking about a little later today, and then obviously zooming in on what that whole ball of wax means for community banks. And then days 2 and 3, which I'm super excited about, are the leadership course through the Lead School. I'll be attending that. Sounds like the plan there is the program just builds on the leadership conference, the leadership concepts that are covered in the actual school sessions. And I think this year the lineup includes, ethics, diversity management, conflict management, leading through crises, organizational change, and reacting to obstacles and handling obstacles. So certainly applicable to anybody in any industry, and I'm looking forward to being an attendee for a couple of days.
It's going to be a great, great summit. Now, you mentioned technology, but I want to start first, Kyle, with policy. So what's going on, both good and not so good, when it comes to policy or in the banking world?
I mean, I can kind of share what I see from my side of things now, and kind of here's what makes the list. Really just what are those policies and what's driving decision making in the banking sector. So first on my list is rates and the impact of interest rates on margin and risk management. So the story obviously here is no surprise to anyone. Rates are higher than they've been in many, many years. And the pace at which we got here was really, really quick, kind of unprecedentedly quick. And this has presented challenges from a pricing perspective, balance sheet sensitivity to market risk management perspective, and even competitive challenges. The rate environment has just made competitive pricing of loans and deposits more difficult. And so I think, this makes my list for that fact alone, but then also just the generational aspect of it. When I started as a bank examiner, rates were not this high, and that was 15, almost 20 years ago now. So we haven't had a rate environment like this in the career of some bankers working today. And so I think it's just, and even outside of banking, I think borrowers, people in their 30s and even into their early 40s haven't had to hold debt above 4 or 5%. And so the shock on the consumer side is real, and then how that affects the negotiation process, the underwriting process, and just like credit provisioning and deposit sourcing processes at banks is real. And I think it's a new experience for both people on either side of the table, banker and borrower. So that's one. I think the overall health of the economy and the direction of the economy is the other aspect that I think about from a policy perspective. A couple things come to mind in that, specifically commercial real estate and what commercial real estate debt is going to look like and how that's going to perform, not just nationally, but also hyper locally. I can tell you here in the Washington, D.C. area, we have been a very slow market to get back to the office. And so that's having a real negative impact on commercial real estate asset prices, primarily in the core of downtown, but also it's pushing out into the suburbs. That same thing is not playing out consistently in every market. And so, everybody's got to manage their own risks and understand where they're exposed. But I think it's tempting to think of the commercial real estate problem as a big bank problem, but it's not. Community banks hold a sizable share of the of the commercial real estate portfolio out there. And some of them have concentrations of that. Now, those might be concentrations that are in markets that have actually improved as a result of the pandemic and the shift to work remote and all that, because some markets have. But it's just about individual market risk management and thinking very locally on that. And I think with that, it's going to come a renewed focus on concentration risk management from the regulatory agencies. That has always been a topic that's gotten criticism, and it's taken a lot of heat over the years when the economy is doing good, that it kind of stifles lending in certain markets. But I think the risks of poor concentration risk management get bared out time and time again when we see these downturns, whether it's a sector cooling or an economic-wide slowdown. So those are two big topics that I see on the policy side of things. Obviously, deposit insurance policy will be something I'm sure the FDIC is looking at, given the failures and the payouts that were kind of unprecedented there. And then, just ongoing Bank Secrecy Act, counterterrorism, and then IT security. IT security is a big policy issue. Customer security, maintaining strong controls over your internal environments to make sure your borrowers are not at risk doing business with you. That's going to continue to be a focus, I'm sure, of the regulatory community.
Well, we talk a lot about regulations, Kyle. How do community banks deal with the cost of all the regulations that are out there?
Yeah, so here's where I think technology offers perhaps the biggest opportunity, and I'll kind of explain that because I think it ties in with the overall message here. So, I come from the regulatory side, and it's my observation that regulation is very much a workflow-based and kind of a step-by-step process. The regulatory process in a nutshell is regulator reaches out to the institution, says, hey, you're going to get an exam. I need some information from you. That institution has to go gather all that information, and then they have to ship that information back to the regulatory agency. And there's this review process, and then conclusions get drawn. And so it's very much, kind of step by step by step. In my line of work, I call that workflow. And so where I'm going with this is that I believe there is a significant opportunity for banks, large and small, to deal with the cost of these regulations by implementing smart technology solutions that automate some of the step-by-step processes and those things that can be done by, non-human workers. And obviously people are going to be hungry for specifics here, and we can get into those specifics when we start talking about how AI is and is not changing in the industry. But I think for this, for right now, what's most important is that banks as they look for places to streamline and bring efficiency into their shops, look to partner with technology vendors that understand your business model, have proven track records in your space, and are scalable for whatever size you are. If you're a very small bank, you need something that understands working with small banks and is affordable. If you're a mid-size, or if you're part of a larger holding company that can cost share outwards, and you need to do similar solutions for a number of different maybe banks in your holding company, find a technology vendor that can support that kind of model. There are many different vendors out there, and some of them have the feel of these off-the-shelf products that you just have to kind of cram into your bank and hope that it works. Some of them, the company I work for is called Appian, very flexible. You can build out any application you need, and it really excels at those workflow process type applications. And reality is that's the majority of regulation.
When we talk about technology, I mean, I think the buzzword in everybody's mind now is AI. So how is and how will AI change the banking industry from a global perspective? And then, Kyle, I want to go a little bit deeper on what you just mentioned, AI in the regulatory process. But let's start with the global, and then we'll go deeper on the regulatory.
I'm glad you asked. This is a very exciting topic. It's an exciting time to be working in this space. I did not know, a year ago when I moved over to Appian, I wasn't sure exactly what effect AI was going to have, but it's growing and changing very quickly, which is an exciting place to be for me personally. And AI is a big reason for that. And so first, let me start out when we talk about AI. I think it's helpful to kind of level set and let you know at least how I think about it. And right now I think about it as we're very much in the hype cycle. Now, that's not to say it's going to go the way of, like crystal clear Pepsi from the 1990s. I do think AI is going to take off. I don't think this is going to be a flash in the pan situation. But AI, it just is a fact. It is the new kid on the block. Everybody's talking about it. And with that comes a certain amount of hype and hysteria that I think is unwarranted. What I think we will see over the next several months or even a year or two is that we will start to grow into AI, and industry by industry, we'll start to figure out what are some things that it's really good at doing right now, what are things that it's not good at doing now, but probably will be in the future, and then what are some things that are just always going to be kind of outside the realm, or at least for the next decade, outside the realm of AI. So that's kind of my level setting message is think about it like it's new, it's exciting, but it's also changing very quickly, and it itself is not at steady state yet. So another way to think about this is this whole conversation will probably be out of date in a year. But, that's the nature of a changing technology environment. So when it comes to banking, first of all, AI takes many forms, but fundamentally it's about using machines, data, and algorithms to answer questions, make decisions potentially, and complete tasks. And these are all things that humans used to do. Humans were answering questions, making decisions, and completing tasks. And now we have data sets, we have computing power, and we have the ability to write algorithms such that we can have machines start doing these things. So I think for banking, and like many industries, the question is, where are those things? Where are those business processes, those workflows, those tasks? Where are those things that we can start to automate? And there's a couple good candidates. We're already seeing AI change the way financial services are offered and sold, particularly at large banks. So I know this podcast is for community banks, but often what happens at the large banks eventually becomes feasible or trickles down, or the technology is there to allow larger or smaller banks to take that same advantage. And so I think it's helpful to kind of see where the large banks are using this, because not necessarily all these different things will trickle down, but some of them I think will make their way into the community banking space as they make sense. So large banks, like I said, are using AI models to customize products offered to their customers, and they're doing that by analyzing the transactions going through their customer accounts. So they're seeing what these people are spending money on, their customers, and then they're turning around offering products and services based on what the AI models are telling them. The other side of that is banks are using AI models to monitor spending habits. So you can envision a world where an AI bot is combing through your transactions and monitoring your spending habits to decide if your spending habits are affecting your credit worthiness, or if there's, if you're a borrower at that same institution and your spending suddenly starts to look a little bit erratic, it's not far away where an AI bot will detect that and alert someone on the credit side that your credit worthiness is taking a hit because of some of the behavior in your checking account. So it's a little scary, but it's also certainly foreseeable that this is the data is there and the computing power is there. And if it helps banks risk manage, it's going to be used. Of course, there's tons of use of AI in customer support. So right now, it's a very common, even my community bank has a help chat. So there's a little chat bot that pops up when I log into my online banking. Not a huge bank, but they've already got a solution like that in place. So it's been used for quite some time in customer support and call center operations. I think we'll see that continue. And I think what's likely to see there is just an ever increasing level of complexity that these bots and chat bots can handle. An example is the airline industry was early adopters of these types of solutions where they could manage customer requests to, change a ticket or cancel a flight through a chat bot. They used to be terrible. I mean, you always were just hitting agent, give me an agent. They've improved. They're getting surprisingly good. And you can complete pretty complicated transactions with your airline now strictly through a chatbot. I think we'll see that in banking over time as well. And with that, obviously, comes some risks. It further distances the bank from their consumers. And they're, a big part of the community banking model is that customer-centric, close relationship aspect. So some of these things will kind of negatively affect that if they're implemented. But I think if they're implemented well, you can certainly mitigate that risk. I was going to kind of shift gears and talk about that's kind of where it is now, but where I see it's going. But if you have a follow-up question in this thread, let's do it.
No, go ahead where it's going. I think that's important as well.
Sure. So I think now this is conjecture because now I'm kind of talking about the future. I just kind of rattled off some examples of where AI is in place now in financial services. I think we'll start to see AI come into play more and more in the lending decision-making space. So AI is really good at pattern recognition and comparing one thing to another. It's just something AI is pretty good at. And so I see that capability being used in the lending space to compare, different loan packages, different borrower balance sheets, and determining, or ranking which one's better, which one's less risky, or finding risk in those credit presentations that maybe a human worker doesn't see or doesn't appreciate. I don't think it's going to replace, in fact, I feel confident saying it will not replace human decision making, but it's nice to have a second pair of eyes. And I can tell you, I've used ChatGPT to write different presentation headlines. I've used it to write different outlines. If I have writer's block and I can't quite get to where I need to be, I've used a generative AI model like ChatGPT to help me along the way. Not that it's replacing me, but it's kind of giving me a jump start. And I think in credit decision making, we might see something similar. I also just see AI expanding its role in the customer support and inquiries. And today, it's pretty limited to those simple calls that have very simple kind of check my balance, transfer money, those types of things are pretty simple. But I don't think it's too far away where a more complex interaction like reissuing a debit card, maybe that's pretty simple. But maybe even something as simple as getting the ball rolling on a home equity line of credit. Those things could be started at least with an AI chatbot operated at your bank. So I think that's kind of the direction I see us going next. And then the long-term future is really anybody's guess.
Yeah, so I'm going to take you down a rabbit hole, Kyle. You said something earlier about workflow, and it made me think about what many people have either read or seen regarding using AI to detect cancers. And they've shown studies that the AI has done better than the oncologist. They've done studies about finding errors in legal contracts. AI is doing better than attorneys. So here's my rabbit hole question. You mentioned workflow. You mentioned, the regulations they examine, a bank being examined. Can you see a point in time where the examiners are using AI to expedite things that they have to do to maybe make the overall process more efficient? Not change the answers, but just be more efficient.
Yeah, I can see it I can see it because we're actually doing something like this at Appian. It's an exciting kind of behind the scenes project. And for the listeners out there, Chris did not have this information, so this is an organically popping up question. So we were curious at Appian about how AI could maybe be used in the regulatory sense to make the regulatory process maybe more consistent. So a big goal of the regulators out there is to be consistent when they're going in and rating their banks a 1 or a 2 or a 3. When you get to the 4s and 5s, the things are kind of going off the rails, so it's not as relevant. But a big goal of regulatory agencies is seeing how consistently, we are taking a look at the numbers, writing up a summary of what examiners found in that exam, and then assigning a numerical rating, those camel ratings 1 to 5. And so they call these horizontal analyses, and there's often goals, especially coming out of a crisis, to kind of look across dozens or hundreds of bank exams and decide, hey, were we consistently calling ones, and were we writing those write-ups using language that was reflective of ones? And then the same thing for the 2s and the 3s. In other words, kind of figuring out how much variability do our examiners have when they're assigning 1s, 2s, 3s, and writing those write-ups and looking at the numbers. So what we did is to test this hypothesis. My hypothesis was that I bet AI would be good at this. And to test this hypothesis, what we did is fed a bunch of UBPR data into a model, a bunch of dummy write-ups for earnings comments from the exam reports that I made up myself. And then I assigned those write-ups ratings based on the numbers from dummy data. And I put all this together and we fed it into a model. And wouldn't you know, these AI bots, this AI model was able to pick out write-ups where I purposely wrote it a little more harshly or was a little more critical of the bank than others. And, as a former examiner, I was able to kind of tweak my language and nuance things. And I thought I was being pretty tricky. And those models picked out inconsistencies in my ratings and my write-ups every single time. So I think that is a really cool proof point that we'll be able to kind of show, like, AI can really find consistency or inconsistency as well. I think the same kinds of applications hold very, very significant promise in the banking space themselves. As you're going through and approving credit decisions, are you doing that consistently? Are you offering rates to similar borrowers under similar circumstances across your enterprise? You could feed those data points into a model and have the model back and say, you gave Chris a little better deal than you gave Kyle, and they're substantially the same borrowers here. Now, that works better with big data sets, of course, we all know that. But I think the accuracy of these things is getting scary good.
People have different opinions of AI. Some people are scared out of their wits about AI. But then I think, what you're saying is there's so many advantages that if we harness the power of AI, that we're going to be able to be so much more effective, so much more efficient, so much more fair, if you will, in the space of banking. So I think it's going to be incredibly fascinating in the not only the years to come, but the months to come, because it is the pace of acceleration is so fast.
I chalk myself up in the camp of AI optimists. So there's AI pessimists and there's AI optimists. And I'm an AI optimist because I have not seen technology ever really in the course of human history not advanced the human race. And I think AI, if we use it right, is going to be that same step in the upward direction, that we leverage this technology to make ourselves better, more enlightened, have a closer source of truth. Now, obviously, it could be used wrong, but I think if we use it right and we put the right controls around it, we will benefit as a species, not to get too meta and macro here, but benefit because of it rather than be harmed of it.
I'm in the camp with you. Well, Kyle, tell us about the benefits of the state exam system. I know it's not something that a lot of people talk about, but I think it is very, very important to understand the benefits of it.
Yeah, this kind of gets back to my role at CSBS. Like I said, the state examination system, or SES, was developed by CSBS through a group of state regulators to solve the need or to meet the demand for a uniform system through which state regulators could examine non-bank companies. So states have a broad remit of regulatory authority, and are really the only cops on the beat for the mortgage industry, the money transmission industry, the payday lending industry, all those non-bank financial service providers out there. The states handle that through licensing and examinations. So those exams look a lot like bank exams, but there was just no system out there. And most of these companies now are doing business in more than one state, which meant they were getting examined by sometimes 2, 3, 5, 20 different state agencies every year. And that was because there was just no good system between all these state agencies to work together on the exams of these different companies. So along comes CSBS with an idea to create SES. They chose to build it out, and so glad we did, because we were able to get a working piece, very complex working piece of software in the hands of state regulators in a few short months. And then we piloted it with our close group of state regulators in late 2019, and then went live in early 2020, and have been rolling it out ever since. So it's a software application, like I said. Really what it does is it helps the states schedule, plan, coordinate, conduct, wrap up, and finalize their supervision of a company. And one really unique thing about the system is that not only do the regulators use it, the regulated industry uses it too. So companies, I think there's probably around 4,000 to date that have been welcomed or invited and signed up for the system. They get examined through SES. So I think that really makes the system unique as far as regulatory platforms out there, is that there's a regulator side and there's the company side, and they're in the same system. And that brings a lot of really nice transparency, just consistency, look and feel, and efficiencies to the whole supervision process that they just weren't there before. In the old paper-based process, things took a lot longer. There was not a lot of transparency. When you digitize that and you move it all into one common platform that both the regulators and the regulated entity can kind of sit at and interact with, you bring a lot of, you kind of up the game of supervision.
When you were involved with that, were you thinking to yourself, what took us so long to get to this point?
Yeah, I mean, I was, because, I cut my teeth on the banking side. And like I said in the intro, I was a bank examiner, and then I came to CSBS and did bank supervision policy. And I saw these big systems that the federal government was creating for their own benefit, their own examiners, that they let the states use. And so on the banking side, we had the benefit of systems in place, and those systems inevitably changed the way supervision happened. They changed the way examiners did their work. And a lot of that was for the better. We made many aspects of it more efficient. And I looked over to the non-bank side, and I was like, gosh, they really need systems here. And it wasn't long before a group of state regulators was saying the same thing. Like, we can't work together as a national force of regulators without technology. We've got to get technology in place. And luckily, they thought of CSBS as the right vehicle to bring that technology to bear. And CSBS was fortunate to have identified Appian as the platform on which to build that, and it all came together really well.
Well, Kyle, what excites you most about the future of community banking?
These were the two most difficult questions for me to answer, by the way. I think what excites me and what scares me. What excites me is how I think technology will be a leveler of the playing field. And maybe this is too optimistic, Pollyanna, but I believe that location graphics are going to become less and less limiting factors for community banks as we go forward. With technology, some of which we've discussed here on today's podcast, any bank can reach their customers anywhere. And, I'm proof of that. I still bank in my hometown bank that my family members work at, bank back in Northeast Iowa. I live in Washington, D.C. There's no reason why I would continue to be banking with them other than I've had that relationship my whole life and I want to keep it. And so with technology, I can keep it. But, 15 years ago, it would have been, or even 20 years ago, it would have been pretty difficult to maintain that banking relationship, especially dealing with bank by mail and checks and all those hassles. And so I think technology offers small banks who develop those early relationships with people an element of stickiness that they can hold on to those customers, even if those customers go far and wide across the country or across the globe. If a parent brings their young child into a bank and opens their first savings account in their small town community, and then that child later on goes to college, moves to a big city, maybe even moves overseas, there is no reason that original banking relationship cannot continue. I'm the proof point of that. I do that in Washington, D.C., and I still bank back in my own hometown in Northeast Iowa. So that to me is the most exciting thing. And as we look to technology to make regulation more efficient, the risk management process is more efficient, those are all really cool things. But I think also the ability for community banks to keep in touch with their customers through technology and offer that same level of service as if they were just a few doors down, they might be thousands of miles away. That's a really exciting part about the future of community banking that I see through technology.
And then what scares you most about the future of community banking?
Well, I think it's kind of the other side of that coin, or maybe a related issue, and that is when I travel back home or travel, back to the rural parts of the country, I continue to see the hollowing out of some communities, whether it's from lack of investment, struggling businesses, depopulation, kids graduating high school and moving away and not coming back. That's hard for me to see, and I think that scares me because as communities get hollowed out, depopulated, it's hard for any business to survive. Then it's hard for the bank to survive. And it worries me that, we're going to continue to see migration away from these rural communities. And what becomes of those banks is a continuing fear. So it's related to the excitement I see, which is the ability for banks who make smart decisions and invest in technology that keeps them connected to those customers. They will be able to survive these things, but it is a continuing, trend that some of the parts of this country are continuing to depopulate. And that's just harder and harder to sustain a business model.
Yeah, it reminds me, Kyle, the title of a book, What Got You Here Won't Get You There. And so these banks in these areas that you're talking about, what has worked in the era of Jimmy Stewart and It's a Wonderful Life is not going to work as well, if at all, going forward. So either they have to make some changes, or they're going to be in some difficult situations. And people a lot smarter than I are working on this. But I agree with you. Technology is one way that they will be able to survive and maybe even thrive despite what's going on in their local community.
Yes, I couldn't agree more.
Well, Kyle, we've talked about a lot today, and you shared some really exciting things. If our listeners want to go a little bit deeper, maybe have some questions with you, what's the best way for them to contact you?
I think one good way is through LinkedIn. You can find me pretty easily just by searching Kyle Thomas and the word Appian, Appian. So if you do a quick search on LinkedIn, you'll find me, and you can direct message me or add me there, or just email me directly. My email address where I work is kyle.thomas@appian.com. Love to hear from anybody.
Kyle, I know you're a busy person. I really want to thank you for taking time out of that busy schedule to visit with us today.
So glad I did. Happy to do it, Chris.
Thanks now.